It's kind of now or never for Portugal.
Did Portugal just go from tax haven to tax hell when Portugal's PM Antonio Costa announced that the country will end their special tax scheme? We're going to explore how this change could impact you and your wallet by speaking to tax experts at Fresh Portugal. In this video, we'll see 3 very common scenarios with and without the NHR tax scheme and let you know what to do if you want to register for NHR before the program ends at the end of this year.
So starting with the NHR, it's perfectly possible that there is some margin for them to apply for the NHR with the high valuable activities, okay, considering the earned income, which means the income derived from the employment or self-employment situation, okay. It could be either what you call in the US a W-2 or a 1099, and with the high valuable activities, this income will be taxed at a flat 20%. I say it flat because normally you're taxed in a progressive scale, so this flat 20% doesn't allow you to have deductions. So it's flat and that's it. And you will also pay Social Security. If you are self-employed, it will be an effective rate of 15%. And if you are an employee of a company registered in Portugal, then you will eventually be taxed at 11% in your part and 23% on the part of the employer. So you can see that there is a huge burden of taxation besides the 20% flat rate of the NHR. Without the NHR, things get even worse because, well, the 20% will not be applied. Either if you don't have high valuable activity or if you don't have the NHR, it will go through the progressive scale of the income tax, which means that allows you to have deductions from the different brackets, okay? It works quite similar to the way that the progressive scale of the income tax in the US with the IRS, but it could reach up to 48%, and it will never be an effective rate of 48%, but it will be close to that. So it will be a huge bill on taxes if you can't manage to have a high valuable activity or if the NHR is not possible for you. And regarding the other streamlines of income for a family like that, I'd imagine that we will have things like rental income. So rental income from abroad, which means from a real estate property located, for example, in the US while you're living in Portugal, it means that this foreign earned rental income under the NHR exempt. With the NHR, 28%, and there are some laws that are being discussed here in Portugal that could decrease that to 25%, okay, without the NHR. With the NHR, all is an exemption. If you have other streams of income, like derived from investments that eventually you have, if it is capital income, as we call here, we are talking about dividends, we are talking about interest, it will all be exempt with the NHR, without the NHR, 28%. Capital gains are tricky because capital gains normally are taxed only in your residency. So although you have this tax liability in the US due to the citizenship, in the case you are a citizen of the US, Portugal won't allow you to claim an exemption in the first place, which means that you will be taxed at 28% with or without the NHR. With the NHR, there is a possibility for you to dispute this decision since you are being taxed in the US and you should be able to claim an exemption, although the tax authorities did not recognize that. So basically for a family of 4, this could be the scenario, and we could also imagine a scenario where you're gonna file it jointly, which means all the family will be in the tax returns, which could reduce a little bit of the burden of taxation if we are talking about the progressive scale. In the event of one of these streams of income falling to the progressive scale, you can get a reduction if you file it jointly. Most likely it will happen, especially when one part of the couple earns everything and the other doesn't have an income, because you're basically gonna sum them up and divide it by 2 to find the rate that it's going to be applied. So the rate that is going to be applied, the progressive rate, it will be lower, and any kind of sons and daughters that you have there included in the tax returns will eventually serve as a deduction. So you have fixed deductions for each kind of kids that you have.
Digital Nomad is a pretty wide spectrum of people. Yeah, if someone's making 10 or 20K a year, NHR doesn't really do that much for them. They'll be fine on progressive taxation, or not fine, depending on how you look at it, but the NHR is mainly a benefit for people who make more money. Digital nomads are a really interesting population in the context of NHR, because if people define themselves as digital nomads, and they actually are, so they're tax residents in Portugal, but they move around the world, move from one country to another, live in various places, and only spend so much time in Portugal, then under the NHR, they fall into two really interesting categories. One is self-employed freelancers. If you're a self-employed freelancer with a high-value activity, so software developer, journalists, I mean, there's a list, and people usually know if they're on the list or not. The well-known benefit of that is that if you're inside Portugal, working in Portugal, your tax rate is 20%. And that can be brought further down by the so-called simplified regime. So there's a certain coefficient to your work. So it's not 20%, it's only 75% of 20%. And on top of that, there's Social Security, which is also brought down. And most people know that the NHR allows people in certain activities to apply a reasonable tax rate to their income. What is slightly hidden in the NHR scheme, and is not relevant for most people, but it is relevant for digital nomads, is that if the following conditions are all fulfilled, you pay zero. The income is foreign sourced, which means that you actually work from overseas. So you need to work not from Portugal, not clients outside of Portugal, you physically out, working out of Portugal. The second condition is that it's a high-value activity. And then the third condition is that you are working from a country with a double taxation treaty with Portugal, which is very frequently the case, but not always for digital nomads. And then that country has a right to tax you on that work, and it doesn't matter whether it actually taxes you or not. Now, it's hypothetical for that the other country will tax, but it's an important hypothetical, because if the country has a right to tax you, that's enough to exempt you from taxation in Portugal. Now, when does a country have a right to tax you if you work there? The typical phrase in most double taxation treaty is if you work from a fixed base. That's the term that appears in most of the double taxation treaties. Most digital nomads don't work from a fixed base, they move. But if someone, for example, is a digital nomad, has a freelancer activity, they are nomading in destinations that have a double taxation treaty, and they work from the same office that's available to them, or the same location that's regularly available to them, they have a presence or a place that they can work from, and it's the same one, then they at least arguably meet these cumulative conditions, and they might want to make themselves aware of that and perhaps rent the same location. Again, it depends on what their income is, but if they qualify through all of these things, then even though the other country wouldn't normally tax them because it wouldn't know of their existence, they have a right to tax them, and therefore NHR exempts that income. They still need to pay Social Security. NHR doesn't deal with Social Security at all, so they will pay something in Portugal, but they could pay no income tax in Portugal at all. And for the vast majority of people, they work from Portugal, their income is not foreign source, it's irrelevant. But for digital nomads, it actually is relevant. That's one category. The other one is people owning a company in another country. That's a very common thing for people to do. Many people use various types of European companies. Whether an LLC, a US LLC is a company or not is a whole discussion. You can have a separate video about that. If people own a company in another country and they work from Portugal and they manage that company from Portugal, then the company normally doesn't help them that much, because the company's tax residence changes to Portugal and the income is no longer foreign sourced, and they no longer get the benefits. But if they work from other countries and they are tax residents in Portugal and they use a company, then the dividends will normally be, if they structure it correctly, they don't make mistakes, the dividends will normally be genuine foreign sourced income and therefore exempt under the NHR. So the digital nomads, if they are mindful of these subtleties, they can use Portugal as a fantastic base to live so long that most of their work is done in other countries. They pay just like everyone else. On top of that, there's Social Security. If they make more than 80K, if I remember the number correctly, they also pay solidarity tax. Again, if you're making 15 or 20K a year, it doesn't make a huge difference. the 20% will actually not be very beneficial for you, if at all. But if you're making 50, 60, 70, 100, 200K, huge difference in the overall tax burden. If you take dividends, Portuguese source dividends are 28%, so that's a fixed rate. But if you take dividends, you probably have paid corporation tax somewhere. So that adds up as well. You could still have a Maltese company pay corporation tax in Malta, keep the management in Malta or Cyprus, other low tax jurisdictions, but as opposed to zero, in Portugal you'll pay 28%. It kind of drops the whole point of having these structures.
Okay, so for retirees, if we imagine a scenario where there's a couple with both of them or one of them with Social Security income from the US or from anywhere else, it will be taxed in Portugal. With the NHR, it will be a flat rate of 10%. Without the NHR, we go back to the progressive scale, different brackets for the income tax. It depends on how much you're being paid for these streams of income. If it is something around $20-30K a year, we will be seeing something between 30-35% as an effective rate. It will not be that high as some people can imagine, but with the NHR, a 10% will always be better.
Well, we have, as of the day we're recording this, we have about 2.5 months left to race into Portugal, change the tax residency and apply for NHR. I think that anyone considering Portugal or that have thought about Portugal was kind of procrastinating a bit and wondering whether they should move or not, then it's kind of, for many people, that those who care about taxes, and I think the people who care about taxes are the ones most impacted by them.
Sure.
It's kind of now or never for Portugal now. If someone's considering whether to come or not, and they're kind of unsure, it would be incredibly wise to use the 2.5 months left to race into Portugal and get the tax residency. It is possible for people of all nationalities. There are routes for everyone. You can't get legal residency at that time, but you can change your tax residency. If someone's thinking, oh, maybe in 3 years' time I might want to retire to Portugal and that's my dream destination, but I'm totally not ready to do it right now, my advice would be get yourself to Portugal right now, sort this thing out, get tax residency. If you're not ready to move right now, you may not want to keep that tax residency right now. You don't have to. The NHR is a status that applies for 10 years. So if you get tax residency now and you decide not to keep it and go back to wherever it is that you're living, at least the NHR will be secured for you. The time will run. So if you do it now and come in 3 years' time, you would have lost 3 years of NHR, but you'll still keep 7.
Zero.
Yeah.
Yep.
For anyone having Portugal as a contingency, an afterthought, a future plan, or already in the process and just not sure whether they can make it on time or not, do it now. Come to Portugal. There's different paths for people in different situations to get NHR on time. No guarantees, because everything is going to be a mess now, and there's no complete certainty, but it should be fine. If people act fast, they should still be able to get the status. If you're watching this video somewhere in 2024 and NHR is gone, then weigh the pros and cons of Portugal as given that it's no longer an option, and decide whether it still works for you. For a lot of people, Portugal's still going to be attractive.
Sure.
Yeah, so we decided to do a success-based formula. The assumption is that it's pretty hard for people anyway to race in and move faster than what they intended. They certainly don't want to pay a lot of money and end up getting nothing. And since we can't guarantee that we can get NHR for everyone, we're pretty confident that we can, but we can't guarantee it to everyone. So we're doing a success-based package where you pay us a relatively small fee to analyze your circumstances, find the most appropriate route, give you tax advice as well. So some people are better off doing structural changes before they move and change their tax residency. It's the only time you can properly make structural changes.
Yeah.
So we do all of this kind of regular pre-moving advice, and we charge for it, but it's relatively a small fee. And then we have plan A and plan B. For some people, it's just plan B, but we try the easiest way to get tax residency. If that fails, we try different routes for tax residency. And then if you're registering as a tax resident and you get your NHR status, then you pay us. That's how this.
That's fair.
This
So
product works.
if they don't get the NHR status, they don't pay. If they do,
they make the initial payment, so they pay us for the analysis
Yeah.
and the advice. We're basically applying or expecting to apply for visas, do a whole immigration application for people that other routes don't work for them. So it's quite a bit of work.
Yeah.
Without full certainty that it works.
Yeah.
But it should, because it's in the guidelines. So
Okay.
the guidelines are pretty clear that what we've designed works. I had a panel of our tax lawyers and immigration lawyers brainstorming, figuring out exactly how this needs to be done.
Okay.
So yeah, that's how we do it.
If you're interested in learning more about what Fresh can offer, please click the link in the description section below, and you'll be able to speak to Zeev or one of his team members about your options.